When it comes to investing, one name towers above all others: Warren Buffett. A man who turned patience, discipline, and careful thinking into billions. Buffett didn't rely on luck, trends, or shortcuts. While most investors chase the latest market hype or panic at every dip, he quietly studies, plans, and builds wealth in a way that few understand, always keeping his focus steady through market highs and lows. Buffett's success isn't just about picking the right stocks. It's about avoiding the mistakes that silently drain your money. Mistakes that many investors repeat over and over, thinking they're making smart choices. These errors can cost thousands or even millions over a lifetime, turning the dream of financial freedom into frustration and unnecessary stress. Whether you are just starting to invest or have years of experience, the lessons from Buffett's approach are crucial. He shows us that investing isn't about rushing, following the crowd, or reacting to fear and greed. It's about discipline, foresight, and the ability to think long-term, maintaining clarity even when the market feels chaotic or unpredictable. In this video, we'll explore 7 investing mistakes that Warren Buffett always avoids. Pitfalls that trap ordinary investors, but can be sidestepped with the right mindset. Here's how to recognize them before it's too late, and how to protect your wealth the Buffett way, ensuring steady growth and security over time. Mistake 1. Ignoring the power of patience. People often think investing is about quick wins, chasing trends, or buying the hot stock everyone is talking about. But Buffett's philosophy is simple. Time is the investor's best friend. He believes in the power of patience and letting investments grow steadily over years, not days. Here's the harsh truth. Impulsive decisions can cost you more than a poor choice in the first place. Investors often sell too early or jump from one investment to another, hoping for fast profits. Buffett's advice: invest in what you understand, hold on to it, and let compounding work its magic. Patience isn't boring. It's profitable and can turn even modest investments into substantial wealth over time. Mistake 2. Following the herd. People often feel pressure to buy what everyone else is buying. After all, if everyone is making money, why wouldn't you? Buffett, however, warns against the danger of following the crowd blindly. Investing isn't about being popular. It's about being right. Many investors buy overvalued stocks just because they're trending, only to watch their investments crash. Buffett advises, be fearful when others are greedy, and greedy when others are fearful. Standing apart from the herd often separates winners from losers and requires courage to trust your own research rather than popular opinion. Mistake 3. Neglecting research and understanding. Here's a mistake that even experienced investors make. Buying something without truly understanding it. Buffett calls this investing without knowledge. People often rely on tips, hearsay, or flashy advertisements, but successful investing requires deep knowledge of the business, its finances, and its long-term potential. Before buying a stock, ask yourself, do I understand this business? Can I predict its future growth? If the answer is no, don't invest. It's simple, but most people ignore it and pay the price, sometimes learning lessons the hard way that could have been avoided. Mistake 4. Chasing short-term profits. Many investors make the mistake of thinking investing is like gambling, hoping for quick returns. Buffett believes short-term thinking is dangerous. Stocks fluctuate, markets rise and fall, but real wealth is built over decades. Focusing on short-term gains often leads to panic selling or poor choices during market dips. The key lesson here is to invest with a long-term perspective and never let temporary market movements dictate your decisions. Mistake 5. Ignoring the value of quality. Some people invest in companies just because they're cheap or trendy, without considering the quality of the business. Buffett's strategy is the opposite. Focus on companies with strong fundamentals, reliable earnings, and competitive advantages. Investing in quality may require waiting for the right opportunity, but it reduces risk and increases the probability of long-term success. Remember, a cheap stock can remain cheap, but a high-quality company can grow exponentially over time and provide a reliable foundation for lasting wealth. Mistake 6. Overlooking the importance of risk management. People often underestimate risk or believe it can be avoided completely. Buffett knows better. He always emphasizes protecting your capital. Taking unnecessary risks, borrowing excessively, or investing in volatile ventures can wipe out your savings overnight. Buffett's rule: never lose money and never forget the first rule. By managing risk carefully, you ensure that even if one investment fails, your overall wealth remains intact, giving you the confidence to continue building steadily. Mistake 7. Letting emotions control decisions. The final mistake is subtle but deadly: emotional investing. Fear, greed, excitement, or panic can cloud judgment. People often sell in a panic when markets dip or buy impulsively during a hype. Buffett advises maintaining a calm, disciplined mindset. Successful investors make decisions based on facts, research, and logic, not headlines or social pressure. Learning to detach emotions from investments is what separates profitable investors from the rest, allowing wealth to grow steadily without constant stress or distraction. Investing is not about luck. It's about wisdom, discipline, and avoiding mistakes that silently erode your wealth. Warren Buffett's 7 lessons are more than just tips. They're guiding principles to help you think clearly, act patiently, and build wealth that lasts a lifetime. So whether you're starting your first investment or managing a growing portfolio, remember, avoid impulsive decisions, do your research, focus on quality, manage risk, and never let emotions take control. Wealth is created not by shortcuts, but by steady, informed, and disciplined investing. If you can master these principles, you won't just survive the financial world, you'll thrive in it. And one day, like Buffett, your wealth won't just grow, it will stand the test of time, giving you freedom, confidence, and the power to shape your future exactly as you envision.